technology.
There he is, but it says Robin Breeze on the bottom of your screen. You do not look like beautiful Robin Breeze.
He's always trying to do at me. Always.
I kind of feel like Robin today. Is that all right? I'm identifying as Robin.
Okay.
That's okay.
Don't say anything I wouldn't say.
All right, perfect.
Dangerous.
Now I'm going to share my screen and we'll get rolling. Sorry for the delay.
Good. Whoop. Oh, there's a doggy. I might have a dog barking here too, so I'm sorry in advance.
I'm going to mute
Oh,
myself.
she will bark, and then when the mailman shows up, you'll know it.
Yeah, if everybody wants to mute their screen until you have a question or something to add, that might work better so everybody can hear.
Yeah, I thought I would go through this real quick, and then we're going to open this up to comments. And what we really want to do, or what I want to do, is get input from everybody on how this is affecting their business and how they're reacting to it and what they're hearing from prospects and clients. So real quick, I got this from Keeping Current Matters, and I love that service. So they did a webinar, I think it was maybe Monday or Tuesday that I was on, and I broke down some of the stuff in there, and I'm trying to get this to a little bit more local here in Indianapolis, but also you can get that data in your current market. So jumping right into this, obviously this is a virus. So what we looked at is how did the S&P 500 react to different historical outbreaks. SARS, it went down 12.8. You can all see this. Avian influenza, MERS, Ebola. Zika was the most recent, and it was a 12.9% drop over 66 days. In comparison, right now, we're looking at the Dow being down basically almost 32% in 30 days. So historically, that's not the biggest drop, but it is quite a drop. In the crisis, which is the housing crisis, which wasn't related to any kind of an outbreak, the drop over 517 days was almost 57%. So it was a true market reset, and that market wasn't positioned to absorb that drop. So looking at basically information from NAR, they're using the same monetary policy that they used to bring us out of that Great Recession, but, and this is the positive note, housing is tremendously more stable than it was in 05, 06, and 07. Anybody that's been in the market for, or excuse me, in the business for 15 or 20 years knows what we were doing back in 2000, 2001, 2002. Literally, people were being driven into home ownership by the most creative programs that we've seen and will ever see in our lifetime. That's hasn't been happening leading up to this. So two things that I believe are different, and experts that I'm listening to believe are different. Number one, there were people that saw this coming last time, and it was driven by housing. It was driven by irresponsible lending and a lot of different things that shouldn't have been happening. And the economy was weak. This economy leading into this was not weak. The Dow was at 30,000. Unemployment's at record lows. Housing is booming. Interest rates are tremendously low. Normally, and this is another indicator, normally the 30-year mortgage rate has followed the 10-year treasury note. For anybody that doesn't understand what the 10-year treasury rate is, it's a little different than mortgage rates. So what they're looking at is they drive these treasury rates down. That's what banks are kind of paying to borrow money, to trade money, kind of a daily rate. They're trying to drive that down to zero or maybe even a negative rate. Mortgage rates have followed that all the way through till this recent drop, and they didn't drop as much as the treasury rate. Looking at that, that actually can be a good thing because banks will not be incentivized to loan money at negative rates. It's going to be very rare, and it would very, I would say, detrimental to the economy if they started loaning money at negative rates. So if the rates become too low, it can actually be a problem, but we are still at this point looking at historically low 30-year fixed rate mortgages. If you look at just what we've seen, I remember in 17 and 18, we were saying, good Lord, you can get a mortgage for 4.5%. And people were running into the market. Now we're seeing rates, I saw rates with good credit as low as 3.18, so 3 1/8. So as those rates stay low, that helps with affordability. I believe that's going to help keep the real estate market stable. One thing that we would not want to see is rates going up or the affordability becoming a problem. So if we look at this historically, and we go back to even 2000, in 2000 is when I started selling new homes. We were literally buying rates down, giving people all kinds of programs to get them into houses, and we had to do it. At 8%, it was a little tough on the debt to income ratio. Well, now even if we go to the market, when the market started to crash in 06, 05, 06, rates were above 6. And 5.5%, 6% was still considered a historically good interest rate. But those rates were high enough that people couldn't afford homes. So those rates started declining, the market started dropping. In 08, 09, you see those rates start to go back down. We got below 5. Now, the fourth quarter of 2019 was 3.7% average. People thought that was amazing. It's now even below 3.25 with most credit profiles. So basically, another positive thing that I'm predicting that the real estate market is not going to get hit as bad now as it was in 08, because this isn't real estate related. This wasn't cheap money flooding the market. This wasn't people, or this is not people going out borrowing $500,000 on a $400,000 house and buying a BMW. So I know we can't predict what's going to happen in the future, but we can be educated and we can let people know why we truly believe that this isn't the reset that we saw in 2008. And over the last 5 recessions, and I'm actually old enough to have been employed in all 5 of these. 1980, real estate actually went up. 1981, there was another recession, real estate went up. 91 was the first real estate in my lifetime, or excuse me, recession, where real estate prices actually dropped. In 01, September 11th, a lot of things caused some problems, but during that problem, real estate actually increased nationwide 6.6%. Obviously, we're all aware of 2008 when it dropped nationwide almost 20%. But one of the problems in 08, and I love this chart, if you were in this business in 05, 06, you can remember this, where literally they were incentivizing lending, people were lending money, banks were lending money, and they were packaging those loans and selling them. So they literally weren't that worried about people's ability to repay the loan, because they knew they were going to sell it on the market anyway. So they were not going to hold those notes. So if you look at what happened, once that started to crash, in 08, it was down below where it is today. But in 07, when they were driving this bubble, affordability, the credit index availability was off the charts. Today, it's reasonable. People aren't going out and getting loans for more than they can afford. Part of it is a lot of them were alive in 2008. As silly as we are as a country, we do learn from some mistakes. And I believe this market is going to be stable because we learned from that mistake. I don't believe that people are going to overextend themselves. Most of my clients, and chime in later if you want, they won't even really borrow up to their limit. They're looking at affordability. They don't want to spend more than they're comfortable with. So I think this is just a different mentality, a different mindset than it was in '08. Annual appreciation running up to '05, '06, when we started to see the problems. If you look at these national appreciation rates of 12.5, 11.4, some of these markets, literally people were doing new build contracts and selling the contracts before they closed and making tens, if not hundreds of thousands of dollars because of the artificial run up in the pricing. We haven't seen that over the last 5 years. Another reason why I think we're protected from that huge drop, we haven't had the run up, especially in Indianapolis, where we're still, and Kyle Gillette talks about this all the time. In Indianapolis, we're still below where we would have been if we'd have just had a normal 2.5 or 3% appreciation since '08. So we're not overpriced as a market. Another thing in '07, '08, the inventory of homes, it was an 8.2 supply nationwide in '07. Today, nationwide, it's 3.1. In Indianapolis, it's of certain areas are less than a month, maybe even a half a month supply. So here's another reason why I don't see a devaluation of properties when supply and demand is against it. It doesn't make sense that these prices would drop when there's so little inventory. If we look at, and these are my board, Indianapolis Board of Realtors, basically right now we have what should be rising is rising. Median sales price up, units sold up, days on the market down. Now, one problem obviously is active inventory is down dramatically, over 12%, February 2020 versus February 2019. Price per square foot up, new listings up, percentage of ask up, absorption rate, which is basically what kind of a supply do we have. The entire MyBor system, which includes over 5,000 listings, is a 1.9 month supply. That means if your house is in good condition and you're priced accordingly, your house should not be on the market more than 60 days. So that's a seller's market, and that's a strong market that I think can kind of fight off, for lack of a better term, the current conditions. Another thing that's different today than in '06, '07. Back in '06, it took 25.4%, and I will tell you that I had clients that were at 30, 35%. I mean, a third of their income was going towards a house, especially if they were going to Fishers back then or Westfield. They were spending more than 25% of their income to get a home. Today, on average, it's 15.5%. So basically what that means is a lot of people are in a lot better shape from an equity standpoint. So leading up, we go back to '05, '06, '07. In those 3 years, $824 billion was taken out of the home equity. Basically, that was people thinking their $300,000 house was worth $450, borrowing $100,000 and putting a new Mercedes in the garage. And then when it started to turn and those houses came back to their natural value, we had a crash. Here, that has not happened. Number one, the banks, I don't believe, are allowing it. Number two, the total 17, 18, and 19, 19 is being estimated, that's $232 billion. That is less than people took out in 2005. Affected for inflation, that shows me that people aren't using their house as a piggy bank. They're not using it as a savings account. They're working, they're saving their money, they're more financially strong. We've got, I always tease them, but I'm telling you, the millennials are not going to fall into this '05, '06, '07 trap. And there's a shout out to Robin Bree. She's smiling, but I will tell you, when we get through this, we may very well find out that those damn millennials are what saved us. The baby boomers kind of started this. The millennials probably save us from this because they are they're trained not to spend and not to leverage themselves. So here's a reason why I believe people are going to keep buying houses. If you go back to 2005, over 7 million homes sold nationwide. '06, it was still up there, '07. Even in '08, during the crash, it was over 4 million houses. And then if you watch this curve go up, it stayed above 5 since 2015. So it hasn't spiked up to 6 or 7 where it's been crazy artificial. I think it's staying in the point where it's 5.5, 5.25. So Statista, who crunches a lot of data, is expecting us to sell over 5 million houses this year as well. No matter what, people are still going to be moving. People are having babies, people are getting married, people are getting jobs, people are getting transferred. All those things that we talk about during training that spur a move, those family things that happen, they're going to keep happening. And when those things happen, people are going to move. I was talking to Heidi a little bit earlier. I think what this might do is get rid of what we would call the unmotivated. The people that are kind of on the fence, they think they might do something, they might not do something, they're going to fade away. The people that stay in this market are going to be motivated. They're going to be looking for somebody that knows what the hell they're talking about. People who need to make a move, that are motivated to make a move, are going to be a lot less likely to work with a sky is falling chicken little than they are somebody who's educated, who has learned, understands their business, and can go in there and explain this to people. So I want these words to be taken very clearly. This is a terrible thing, but looked at the right way, this is an opportunity. This is an opportunity to get better at what we do, to come together as a group. And when we come through this, how do I say this without seeming, well, the people that weren't serious, they will no longer be in the way. And I know that's a pretty straightforward statement, but it's true. We've all, as active agents, interacted with people and we shake our heads. Every day in the office, somebody would come in and say, what in the world is going on out there with some of these agents? Well, folks, they're about to go ahead and get out of there. I'm going to make a prediction that those people just aren't going to be serious enough to stick through this. And the people that are serious enough to stick through this are going to be the ones that make a lot of money and come out. Not that we're mercenary about this, but we're going to earn that money and we're going to deserve it. So I put this little slide in there. I'm getting awful emotional here at home, but I would like to see us be a lighthouse. If a wave is coming to the shore, the last thing in the world you can do is stick your head in the sand. But you can get up in the lighthouse and you can look at what's going on and you can learn. We all have the ability and the basic knowledge to gather information so that we can communicate with people. We can't tell them what's going to happen with a quarantine. I can't tell somebody how long we're going to be working from home, but I can tell you historically how markets have responded. And I'm hoping I'm sharing with you the ammunition when you're talking to somebody to say, look, don't automatically believe that this is going to be like 2008, because I don't believe it is. I think it's going to be a totally different market when we come out of this. So that's it for me. Robin, let's unmute. How do I unmute?
Everybody can go onto their picture and unmute, or at the bottom of the screen, I believe too, on the bottom left, it has a mute or unmute button. Thanks so much for that. I love the reference to the lighthouse. I was actually on a marketing call this morning with small businesses and what they're doing. And the consensus is that in dark times, we need to be the light. And so I love that, Jeff. It was very similar to what you were saying. Also, Shannon, I think she was on the call. I don't know if Shannon Gilbert's on here.
I'm on.
Shannon's down there, yeah.
I'm on.
Hi, Shannon.
Hi.
You posted a great text message this morning and sharing, the market is still going. Can you talk to us a little bit about what you're seeing?
I'm sorry, I didn't catch the first part of it.
You posted a text message between
Oh,
you.
yeah. Truly, it's Jamie and Donna and Janet that are out there on the front lines for us, but they're consistently busy. They've been out showing, and every time that they're out showing, Donna and Jamie both wrote an offer on the same house that I think had 12 offers on it on Indian Trail. Where was that at? Inside trail, that's Deer Path, isn't it?
Yes, yep.
So, I mean, I feel like buyers are out there, they're scrounging, they're begging for listings. It's just helping them navigate and figure out how to get into the listings. We just need to get more inventory out there.
Right. And I had an inspection this morning, so that's still going on. Lots of messages from lenders and title companies. They're all still doing business. They're just doing it a little differently.
I have a quick question
Yeah.
for Shannon
Yeah.
or anybody else that wants to chime in. But how are you answering the question from buyers that is now, like today or tomorrow, a good time to buy?
I mean, I can take that first. I mean, for us, it's always been that why is it not the right time to buy? We've been in this position where interest rates are the lowest that they've ever seen. And I can't control what tomorrow brings, but I can control what I have to offer them today. And what I have to offer them today is an amazing opportunity to get into a house that if interest rates go up even 0.5%, even if the prices of the homes slowly start to go down, it's not enough to make a difference. They need to be in the home today because interest rates, I can guarantee, won't continue to be here in 10 more years. We're not going to keep saying this decade after decade after decade that now it's 50-year lows.
Right.
Agreed.
Anybody
I think we might, over the next, hopefully this, whatever we're going through doesn't last long, but I mean, we really are. I think Jeff did an awesome job of explaining, why this is different than what it was back in 2008. And if we see any depression in price, it's going to be a very short-term depression, if that. But after we get on the other side of this thing, I think we're going to be right back in the thick of things. And so I'm not out there on the front line selling every day like Shannon and all the rest of you are. I'm not working with a lot of buyers, but if I'm putting myself in your shoes, and if I had to answer that question, I actually was talking to Asha Bryant just a little bit before this, and she asked me that question, how you would respond. And, my response would be, yes, it is a great time to buy. I think that there is going to be a slightly less demand in the next month or so. So you may be dealing with less multiple offer situations on some properties. The interest rates are still good. Let's get out there and take a look now. There's a lot of ways that we can, if they're worried about going into houses or, we can get out there on our phones, do video walkthroughs. Realtors are all over Facebook posting about, how they can help their clients, going out and doing the walkthroughs for them, video them, give them actual feedback on the house before they decide to actually show up and take a look at it. So obviously I'm looking at this from an optimistic point of view. I think that, yes, today is a good time to buy a house. I mean, let's get out there, before the crowds come back.
One thing I would add to that, if I can, is that what we're seeing is we have gained so much momentum in this market. I've been very, very proud of our agents. I'm actually on I have 3 different sides right now with 3 different agents of how we're writing offers, how we're putting ourselves in a professional stance. We're communicating with the listing agents. I don't want to lose that. Even if the competition goes a little bit, you guys need to be writing the best, most killer offers for these people, because I inventory, it's hard. I'm going to the listing appointments. I've been to 2 today, and they're like, well, we can't really put a timeline on it. They'll sign with me, they'll do everything, but I can't get them across that line as to whether they'll list April 1st or whether it's going to be April 15th or whether that's May 1st. So I don't think the inventory, I think some of the people have gotten skittish, but our buyers are out there, make aggressive offers, because I can't guarantee another one's going to show up right around the corner again.
So what I have, sorry.
No, I was
Go
just going to
ahead,
ask Shannon.
Christopher.
So what are you telling your sellers looking to list? Because there's a lot of uncertainty with selling your home.
Yeah.
Sound like.
So here's the thing, and this is what I know, and what I know is what I'm experiencing, is that buyers are begging me to find them homes. I have done untraditional ways, things I've never done in this industry, from encouraging agents to door knock a neighborhood in order to find that home. And because of that, those buyers aren't going away. And it makes a little bit more sense today as we're talking about the millennials. I feel like the millennials are also our most They're not scared. They're not afraid. They don't fall into these scare tactics, I feel like. And because of that, they're still going to be out there looking. So with my sellers, it's like, this is the hand that we're dealt. This is what we're doing to take it forward. Here's some of the things that I can do. What would you be most comfortable with? So I had a lady today, she literally was like, I don't care, just sell my house. As I was in that listing, I was getting calls obsessively from another listing, and he's like, listen, he wants me to pre-screen everybody. I need to be there for every single showing. I need to make sure that they only go in. It's like, it's craziness, but I'll do what he needs us to do. But the bottom line is getting it on the market. I can guarantee I can sell the house if I can just get it on the market.
So I have one point to make. Can you hear me?
Yeah.
Oh, okay, sorry. So I have a lot of questions in comparison from like my buyers or sellers, that this is just like what Jeff was saying, 2008 repeat. And my response to that, this is exactly like 2003 Hong Kong virus, right? They dealt with SARS. The prices of the homes did not change. The only difference was the number of transactions. So unfortunately, during that period, the transactions fell 97 to 98%. But after that, they recovered, which was, I think, 6 months or something. Everything took off. So only you had, we are the best agents we can be, right? But if we keep putting ourselves out there, be carefully, obviously, we're going to come out on the top, because there was a lot of drop in agents during that time in Hong Kong. But that's what I tell them. The prices didn't decline. It was just the number of transactions. And after they came out, it was a boom market.
We'll be stronger because of it.
Yeah.
But if you look at the market in the US, we haven't had that drop off in real estate transactions.
But we've definitely had the increase in real estate agents.
Yes.
That's
Well,
for
yeah,
sure.
and I mean, I guess I said it bluntly, but I don't think
Yes.
we'll have as many agents
I
next
said
year.
the same thing. As soon as this started to pop off, that's exactly what I told my agents is, listen, we
Hang in
have
there.
trained ourselves to be the best of the best, and we will continue to be. So who do you think is going to be selling those houses? Because houses will always sell. It will be us.
Yes.
End of the day, it's us. We're good. Just keep doing what you're doing, hone in on your skills, and push forward. We could never be aligned in a better position with a better company, because one of the whole reasons why I came back here was to have an edge of what's coming next, not what's going on in the market. We all can see that. I want to be paired with someone that I know can come out of this or anything else that we're put with ahead of the game, because we have what's in place, and that's creating buyers that we want. We need the leads. We create the leads.
Yeah, this is the best company to be with, and so I really believe that. And something like this, we've got what, 30 people on here?
There was,
I can't
there,
even count. What do we
53.
have, Robin?
53.
Yeah, we had
53 people
we
on
had
here.
almost 60 here earlier.
53 people trying to figure out how to be of service. We're not trying to figure out how to make money. We're trying to figure out how to get people through. I mean, I've got family, I've got friends. I was a little freaked out Monday. I met with Chris on Monday, and I said, I don't know if I'm gonna work from home or I'm gonna come in. But if you would have told me a week ago that I'd be doing Zoom meetings, I would have bet a lot of money against me even being able to log in.
Hey,
But now we've got
guys,
53 people connected as a group. And anybody in this group, I will say this, I believe this with my heart, that anybody in this group would do anything they could for you to help you. If you need something, you reach out to this group, they're going to help you. And that's how we get through something like this. Not
Absolutely.
on your own, but as a group.
And no matter what that something is, if you're just fucking pissed because a deal went south and you need someone else that can just relax and breathe with you, do it. Because if I didn't have my team to be able to do that stuff with on a consistent basis, I don't think I would be half as sane as what I am, which we know that that's a struggle some days. So
hey, this is Scott from Denver. I've got 9 transactions going right now, and I just spoke to I have a double-ended listing, and I just talked to my millennial buyers, and she said they were reconsidering the house sale, and I nearly dropped the phone, and then she said she was just kidding. So she bought a great house at a great price, and they're moving forward. And I have a bunch of like a older couple. I've got younger, and everybody still sees the benefit of buying and selling their houses, and interest rates are great. So right now I'm currently moving forward on everything. We're actually trying to move up closings and get them done just in case things get worse. But
Yeah,
I've got 6 company leads right now that they're under contract.
So what about the closings? I mean, that's the part I'm worried. I have
Not worried
closing-
about it. We've got mobile notaries. The title companies here are disinfecting, and we're only 2 or 3 people at a closing table. If my clients are upset and concerned about going into a closing table, the mobile notary will go to their house and close.
I think I just want to chime in here because we've dealt with this a couple times in the last couple days where an agent has called us and said that they have a buyer or a seller that wants to get out of their deal, because of all of this, because of the uncertainty. And I think we're in a really unique position right now, or strange position, where in the past it was, we were kind of fighting to hold someone's feet to the fire. And I think, over the next week or two, we really have to balance that with, helping our clients, feel comfortable that we're a sounding board. And if they want to get out of the contract, we exhausted all other options of trying to make it work. And the reason is they want to get out of it because it's just the uncertainty of what's going to happen tomorrow or next week.
Yeah.
I think we really have to be an advocate for them.
That what?
And
No school until May 1st?
hey, Rich.
Oh, I'm sorry.
We just got school canceled until May 1st. But anyway, what I'm trying to say here is that, it's kind of like the way we recruit, or when somebody leaves Highgarden, we don't burn any bridges because we want them to come back. When the grass isn't greener on the other side, we want them to come back to Highgarden. So we try and facilitate everything we can do. Leave their email on, give them the leads to work, or whatever we need to do. And I think we have to take that same attitude with our clients right now, because the people that want to list, that we have their home listed and they want to take it off the market, or the buyers that just signed a contract 48 hours ago that want to get out of their deal because they're not sure if they're going to be able to they're going to have their job in a month from now. The way we treat those people right now gives us a much better chance if we treat them well and we're their advocate and we're looking out for their best interest. Chances are that we're going to be their realtor a month from now or 2 weeks from now when they're back in the market and want to list their house or buy another one. So
That's so true.
if we go the other direction and try and make them uncomfortable or hold their feet to the fire, we're going to be the last realtor that they call.
Yeah, I totally agree with that as well. Yeah, that's a good point.
I think you can, I think that we can take one shot at finding out what their motivation is. If it's just a little bit of fear and we can talk through that and they do need to buy a house, even if prices dropped $20,000, but rates went up to 5 or 6%, it's going to cost you more in the future to buy a house. So no, I would never try to hold somebody's feet to the fire, but I would at least take a chance to have a conversation to let them know that we're advocates. We've been through this and let's talk this out. Would you agree, Chris? I mean, I think we owe it to them.
I definitely would agree that, that yes, I would try and, if I truly believed in my heart that yes, I'm doing the best thing for my client by keeping them in the contract, yes, that's the route I would go. But I think in these situations, sometimes reason doesn't hit home with anyone. It's because there's an unknown. You can tell me about the past and the low interest rates and everything else, but what you can't tell me about is what's going to happen tomorrow.
That's right.
So I think sometimes we have to remember that. you guys have any questions? I know, I think Steve's also on here. Do you guys have any questions right now? I mean, you got some really good agents on this Zoom meeting. I'll just take an opportunity real quickly to tell you how proud I am of Jeff and Robin and Kelly and everybody that's showing up here, because you know, it means a lot to us that you guys are taking the time to put this together, keep everybody together, and thank you.
Thank
Thank
you.
Thank
Yeah.
you.
so much.
All right, stay safe. Don't hesitate to reach out. Anybody, everybody.
Please
Reach
call.
out. Get
We're
a
all in it
partner,
together.
you know, buddy up with somebody like Shannon says, you know. It's better than
Extroverts are
drinking
not
yourself
uncommon.
silly. Just call and tell somebody your troubles. Or if you want to
you.
drink, call Kyle.
Wow.
Hey, I'll take a buddy.
Yeah,
Thank
pick
you.
a buddy.
See you later.
Guys.
Bye.
Thanks,
All right,
guys.
have a great day, everyone.
Go team.
Bye-bye.